Not losing big is the single most important factor for winning big. As a speculator, losing is not a choice, but how much you lose is. Right now, somewhere out in the world, someone is tirelessly preparing for success. If you fail to prepare, that somebody probably will make big money while you only dream about what you could have been and should have done. Long-term success in the stock market has nothing to do with hope or luck. Winning stock traders have rules and a well-thought-out plan. Conversely, losers lack rules, or if they have rules, they don't stick to them for very long, they deviate. Those who succeed big at anything all have the same attitude. You keep going until it happens or you die trying. Quitting is not an option. Using a monthly tracker allows me to track my trading results month by month. This helps me keep perspective. When you sell half, if the stock goes higher, you say to yourself, "Thank goodness I kept half." If the stock goes lower, you'll say, "Thank goodness I sold half." Psychologically, it's a win-win either way. There have been too many times when I have been shaken out of a good position by looking at the short-term time frame. Success in the market comes from a concerted effort and a willingness to allow the learning curve to unfold, no matter how long it takes. I went from mediocre to a stellar performer when I told myself, "To heck with worrying about the money and obsessing over the scoreboard. I'm just going to focus on being the best trader I can be and sticking to the rules." Then the money followed. If you find yourself getting stopped out of your positions over and over, there can only be two things wrong. 1. Your stock selection criteria are flawed. 2. The general market environment is hostile. In the stock market, you can make money or you can make excuses, but you can't make both. Do whatever it takes to eliminate your own personal excuses. Your road to success starts by taking responsibility. Don't blame outside factors for your lack of success. It doesn't feel great breaking even on a trade that was once a profit, but it feels a lot better than when you let a good-sized gain turn into a losing trade. You must not risk more than you can reasonably expect to gain. Otherwise, you're stacking the odds against you, and that's gambling. Once I make a profit, that money belongs to me. Yesterday's profit is part of today's principal. Never stray from the basics of rule number 1 of always going in with a plan. The difference between interest and commitment is the will not to give up. When you truly commit to something, you have no alternative but success. Specialists get paid well, while those who know a little about many things make good conversation at parties. Mastery requires sacrifices, therefore, something must come first. Make a list, prioritize, and pursue accordingly. Focus, achieve, and then move to the next big goal. For instance, if the Nasdaq is below its 200-day line and its 50-day line, it may be worth looking into stocks that are above their own 250-day lines. When the market turns up, those stocks could be your next market leaders. When a position moves against you and you're at a loss, especially right after you buy, it's simple, you made a mistake. It may be that you're missing an element in your selection criteria, or your timing could be off. I want to be at a profit immediately. If I don't see a profit very soon after I buy the stock, I'm inclined to just get out. It's not enough to have knowledge, a dream, or passion. It's what you do with what you know that counts. The best time to get started is now. If you don't have a plan, you will surely experience paralyzing emotions and second-guess yourself at key decision-making moments. If you're like most traders, your emotions fluctuate constantly between two emotions and you struggle with the following: indecisiveness. Should I buy? Should I sell? Should I hold? Regret. I should have bought. I should have sold. I should have held. In the stock market, those who are not humble are destined to be humbled. Trading without a stop loss is like driving a car without brakes. Maybe you could make it around the block a few times, but if you did drive without brakes, how far do you think you could go before you crash? Those who trade without a stop eventually stop trading. Your goal as a stock speculator is preparedness, to trade with few surprises. To do so, you need to develop a dependable way to handle virtually every situation that may occur. By keeping track of your results, you will gain insight into yourself in your trading that no book, seminar, indicator, or system could ever tell you. Part of that plan is sacrificing trades that carry too much risk. There are only 4 things in trading that you can control directly. Before you make the trade, you control what you buy, how much you buy, when you buy. After you make the trade, you control when you sell. That's it, 3 decisions prior to making the trade, and only 1 to make after you're in the trade. It wasn't until I suffered enough big losses that I made the decision that turned my performance from mediocre to stellar. I decided it was time to make money and stop stressing about my ego. My goal is not to buy at the lowest or cheapest price but at the right price, just as a stock is ready to move significantly higher. Trying to pick a bottom is unnecessary and a waste of time. It misses the whole point. 4 very dangerous words, just this one time. When you tell yourself, I'm going to break my rule just this once, you open the door to losing discipline, because it's never just one time. It's like an alcoholic saying, just one drink. By investing in trading, you can be a millionaire. But this is not an easy thing. Chances are you will encounter many heartbreaks until the day you acquire the necessary knowledge to start making money. The reason most investors fail to sell and cut their loss short is because they fear that after they sell, the stock might go back up and they will be wrong twice. It's driven by the fear of regret, which stems from pure ego. You deserve success, but only if you do the right things. The market has no pity on fools. Every major correction begins as a minor reaction. You can't tell when a 10% decline is the beginning of a 50% decline until after the fact, when it's too late. Try to give your stocks until the end of the day unless the reversal is so severe that it triggers your protective stop. The trend is your friend. If you try to trade against it, the trend becomes your worst enemy. To compound your capital, you must be where the action is. You can't afford to have your money tied up in a stock waiting for what you think is a great fundamental story to get noticed by the rest of the world.